Welcome to this week's Q&A. We've got a great question from one of our viewers in London this week, and he said to me, look, do you think property prices in Australia are going to continue to go up next year, so in 2022? And it's a question that's on many people's minds, for some perhaps because they haven't bought yet and they've been wanting to for some time, for others who feel they want to add to their portfolios and don't know if it's a good time or not. So fairly pertinent for different reasons to different people. But let's have a look at that, because for me, there is a straightforward answer to this question, and it is yes. I do believe that Australian residential property prices will continue to rise next year in 2022, and depending on which market you're in, because as all of our viewers will know, there are so many different property markets in Australia, different capital city markets, different major regional markets, and of course many others. But some of those will continue to go up in value, I believe, not just next year, but the year after. And look, that's my base case. So let's look at why I think that. And some of the important reasons are lack of stock. So we've got a pent-up demand that's already built up and is going to continue to increase, because as we see the lockdowns in Sydney and in Melbourne stay in place for longer, Canberra joining those and staying in place for longer, more people are going to sit on the sidelines and not put their properties up for sale, which means there's going to be an ever-increasing build-up of this pent-up demand over the ensuing months of 2021. So that's going to continue. And then, of course, we look at another important factor is affordability. So if you want to buy a house, can you afford to do so? Well, with the current very low interest rates, and we're still in a very low fixed rate market, so while people can take advantage of those low fixed interest rates, I think that'll continue to drive property prices higher. And at some point in time, of course, we're going to see a change there. I'll come to that in a moment, but we follow, I suppose, the growth in credit. So credit growth for housing was led initially last year by first home buyers entering the market, taking advantage of the ultra low interest rates that some of the major banks were offering, and that saw a massive spike in take-up. And then that was obviously followed by the other parts of the owner-occupier markets, the right sizes, so there might be upsizes or downsizes, whatever the case may be. But there was a large spike in growth in that part of the credit market. And now that's being followed by investors. Nowhere near as large yet, but we've seen the first home buyer market start to tick down, and I think that's due to affordability factors on the flip side of that, where perhaps first home buyers, particularly in Sydney, are saying, gosh, I don't know if I can afford to pay this much for this property. But that's another area that I think is going to continue to stimulate the market. We may see APRA come through with some macroprudential measures, but currently for most people who are going for a loan, I think everyone will agree that lending standards are still very, very stringent, very tough. So I think we're still in pretty good shape there. I do see some potential developments coming over the next number of months, and we'll continue to keep our viewers appraised of that. But so the investors are yet to enter the market, and I think that'll happen over the next year or so. And the other most important question is, where else can you invest into growth assets? Generally speaking, that's either equities or properties. So, many people at the moment, when you have equity markets, particularly in the US at all-time highs, are a little bit nervous of that. They're a little bit concerned that potentially the rise in inflation that we've seen in certain sectors may not be transitory, may remain longer. So there's a little bit of concern about that. And people have often viewed property as a more conservative form of investing in growth assets rather than equities. We believe both are good, and people should just simply do their research and be well advised to make sure that they make some reasonably intelligent choices around that. And it all depends about their own particular situation in any event. But they're things that I think are impacting things. So that's my base case. Yes, I think prices will continue to increase next year and in many markets the year after. But let's say there was another catastrophe, a new strain of Delta that may not be susceptible to, or may not benefit from vaccinations. Anything could happen, I suppose. If that were to happen, then I believe in Australia the government and the RBA are still in a position to be able to add stimulus and support the economy and support employment. So I think we're in reasonably good shape. And one of the things that plays out and shows me that is, the recent decision by the RBA to continue with its tapering, i.e. reduction of buying government bonds from $5 billion a week to $4 billion a week. However, what they said was, we're going to be flexible about this, and this is going to be open-ended. So unlike before where they put certain dates around review and potentially continuing to taper this amount of stimulus, they haven't done so. So in effect, they've actually increased the amount of stimulus there from about 105 billion to 147 billion. And that's perhaps not in the headlines, but it just shows that the RBA and the government is very cognizant of what's happening in the economy. They're certainly aware of what these lockdowns will do in terms of GDP growth for Australia in the third and potentially fourth quarters of the year. So they're there to accommodate that and to make sure that, that we see employment normalise again and stimulate the economy. So I feel we're in pretty good shape overall. I suppose to wrap up, the real question should be not, are property prices going to continue to increase next year? Because the relevance of that is actually not great. Property, I think, is a poor speculative investment where you're spending a lot of money buying something with high transaction costs simply in the hope of gaining a quick profit on that next year and potentially paying far more capital gains tax than you need to. So let's look at it realistically. I mean, I look back and when I bought my first investment property, I can't tell anyone what happened the following year or the year after that or even the year after that because it was that long ago and it doesn't matter. So what is important is that you buy a quality asset in a sought after location in a good market that's going to continue to go up. Whether it goes up next year and how much it goes up next year is not really of great relevance unless you want to make yourself feel better on the day. So the real question should be, will property prices continue to increase over time? And again, I think my base case scenario is that yes, they will. So I hope that's been helpful and makes sense to our viewers out there. If you like what you've seen, please follow us on our YouTube channel and click like. Send in your questions. I look forward to those and I'll see you again next week in our Q&A. All the very best. I'm Andrew Montevega from Wise Guru.